All right, everybody. Well, it is 12 o'clock, straight up noon here in Texas. So let's go ahead and get started. My name is Jeff Bond, and I want to welcome you today to our webinar on the benefit of benefits. As you know, business owners nowadays hiring and retaining quality team members and employees is harder than ever. Finding those right people that we want to join our team and making sure that the people that we have stay with us. So benefits is huge, whether it's health benefits, whether it's financial. The big buzzword nowadays has become, the company culture. What's your company culture like? So that's kind of the stuff that we want to get into today as we go through this webinar. So I'd like to take a chance to have our panelists introduce themselves. I've gone out and found two of the best guys in the industry, whether you're talking about financial or health benefits, and they have graciously been nice enough to be on our panel today to have these discussions, educate us a little bit more, and see what we can do to provide these type of benefits. So Blake, if you would like to begin, I'd like you to introduce yourself, and then we can talk a little bit more about benefits. Go ahead.
Yeah, absolutely. Thanks, Jeff. Appreciate you having me. Again, my name's Blake Terry. We have on an independent health insurance firm or brokerage, licensed across 30 plus states in the country and continuing to grow. Basically specialize in offering health benefits as well as some supplemental products to small businesses, small business owners, 1099 contractors, things of that nature. And been doing it for several years. Been blessed, to kind of grow year over year. And we just love giving people good information, trying to put them in the right spot.
Cool. Sorry, I think I was still on Matt's thing. Yeah, I think I switched them. Well, thank you, Blake. Matt, if you would like to introduce yourself and tell us a bit about you, and then we'll get into some benefits financial benefits that you can talk to us about.
Okay. Yeah, I appreciate you having me, Jeff. Been with Edward Jones since 2008, so coming up on 16 years. And I work with a lot of individuals, and a lot of those individuals happen to be business owners. And so when we're working with those individuals and their families, we also, one of the things that we talk about a lot is their businesses and what can they be doing to improve, not only their situation, but also help the situation, of their employees. So we go through, does it make sense to add an employer retirement plan? And if so, what type, depending on the type of company. And so, that's what I'm here to talk about today, is just some of the opportunities that business owners have to not only to help themselves, but also help employees, and just some of the things that you might think about, whether it makes sense today, or if you're looking at your 1 year, 3 year, 5 year business plan. When might it make sense to start trying to add, an employer sponsored plan for your company?
Awesome. Well, thank you so much. And my name is Jeff Bond. I am the co-owner of a residential and light commercial heating and air conditioning company here in Texas. I'm also the founder and president of Trade Jobs, which is your go-to recruitment and hiring platform for the HVAC, plumbing, and electrical trades. So we're thankful that all of you are here today. So Blake, I want to start with you. Let's talk about benefits, health benefits. This is such, so many of us that own smaller companies have struggled for years to be able to provide some sort of benefit to help get that top talent to come work for us or to stay with us. Unfortunately, we'll have team members leave, maybe not because of their pay or their company culture, but because they need health insurance. And I know that it depends kind of on company size. I know there's a lot of different options out there, but can you kind of explain to us what traditional benefits look like these days?
Absolutely. So you kind of hit the nail on the head there, especially with smaller companies, smaller businesses. And when I say smaller, mainly just talking about those companies that have fewer than 50 full-time equivalent employees. Healthcare, as you mentioned, can be kind of a burden for those companies. Maybe they just don't have the time, energy, resources to just administer or devote to that. So we really want to take that burden or that headache and turn it into an asset. So our services, think of us as kind of just outsourcing that part of your human resources or your healthcare. We kind of administer all that for the business as well as the employees at no cost to the business, and just make sure everybody's in the right spot. But as a small business, you've really got a couple of different options. Most owners are aware that you can go through your payroll provider or maybe a major carrier or broker and essentially buy what you would be required to have if you were over that 50 employee threshold, and buy a traditional group plan. And as I tell business owners every day, those plans are phenomenal. Kind of jokingly refer to them as the Ferraris of healthcare. You know, they're the best of the best, but just like a Ferrari, it comes with that Ferrari price tag. And so that price tag has to be passed along to the business or to the employee, or a combination of both. So I think that if the business is in a financial position to where they can subsidize 80% or more of that premium for the employee, subsidize 50% or more of that premium for the spouse and or child add-on, then most likely they can really head that direction and explore selecting one of those plans through a major carrier, Blue Cross, United, whatever. And that plan's probably going to fit good for that business and that company. But
Hey,
most small businesses, yes, sir.
I'm sorry. So that 80-50 you were talking about, that 80%,
Yes.
50%, is that a government requirement? If that is what you would have to, as the employer, that's your part?
That's a great question. So the employer in that example is required to pay 50% of the cost of the employee only. They don't have to pay anything for the spouse or child add-on. So that's why I kind of threw that number out there, because later we might get into a little bit more detail of how, if you're only doing the minimum, that's going to, you know, create some bad cultural things in your business and kind of penalize some of your employees. But if you can contribute or subsidize that much, then typically it's, you know, that's the direction we like to see people go. It's a great fit, and it makes a lot of sense. But
So that
where we help a lot of,
right.
Where we help a lot of small businesses is really with an alternative to that, because they're under that threshold of employees. They have other options to where they can basically set up like a health contribution or a health reimbursement plan. There's a lot of different ways to do that from a tax standpoint. I'm not a CPA, so we won't get into that today, but essentially you can give your employees access to coverage through an advisor or an agent like yourself. And then you can, as the company, contribute any amount towards the cost of that healthcare. The big benefit to both the business's employee is the business can really control their cost and they don't have to manage the plan. The employee really gets to double dip because they get a little bit of a contribution from the company, but they also qualify for discounts through certain health plans that are available, whether it's non-smoking, whether it's generally good health, whether it's income-based. I mean, there's tons of opportunities for that employee to get additional discounts and savings, so that it really lowers the cost to not only themselves, but any other family members that might want to participate as well.
Is this just for health insurance, or is there other, is there vision or dental, anything like that that goes along with this, kind of what you're talking about?
Right. So it's kind of everything that falls into that category. So it's very easy to add on dental, or to just get a dental policy on its own. Same thing for vision. And then there's some other cool benefits that you can kind of add to health policies to just mitigate cost and keep premiums lower, you know, accident plans, critical illness benefits, things of that nature.
Okay, so talking about this medical reimbursement, because I think that's kind of where it sounds like you would really help the small business owner, right? Maybe I've got myself and a couple of employees, or me and me and one or two, or, you know, me and a handful of guys working for me. That medical reimbursement, is that a dollar amount that I just come up with, or you help direct based on my team members kind of looking at the coverage that they would get? Can you explain that a little bit more?
Absolutely. So ultimately it's up to you as the business owner. You can determine any dollar amount, any percentage, or a combination of the two that you choose. But we try to help the owner with that decision, not really trying to tell them what to do, but the approach I take is really to ask questions of the owner is, you know, how do you want your employees to receive these benefits? Obviously, owners want them to, you know, view this as a value to their benefits package, right? So what I'm essentially trying to figure out and to help that owner figure out is, based on their budget, whether it's a high budget or a low budget, how do we need to approach offering those benefits to them so that it is a value add and received as a benefit moving forward.
Sure.
And so there's a lot of questions that we can ask up front just to sort of help them make some of those decisions to where it truly is their decision and they're feeling good about whatever their budget is.
Okay. What do you see, and kind of help walk us through if you've got, like a lot of the guys that work for me, their spouse maybe works and is covered under a group plan. Do you usually see that it's more affordable to help someone like that buy something through a broker like yourself? Or do you think it's usually more affordable for them to join that group plan? Or does it kind of, I mean, how do you make that decision?
Right. So that's certainly something that gets brought up as we're meeting with each employee and trying to help them make the best financial decision and pick the best plan.
Mhm.
I would say in general, 50 to 60% of the time, we can still help save that person money by putting them under the small business, health contribution plan.
Okay.
But it really just depends on what the cost is of that spouse's coverage.
Sure.
There's some laws out there that sort of cap it to where it's not going to exceed about 8% of your monthly income. And I won't get too much into that. Just, we don't want to confuse or complicate it, but definitely that's something that gets brought up and we, try to kind of navigate that so that, they truly know what their options are. And if we can find some cost savings for them, then we definitely, will present that opportunity to them.
Sure. Kind of one last thing that I was thinking about is I see, you see a lot of commercials for companies that sell like supplemental insurance, that kind of stuff. Is that something that you help with as well?
Yes. So I would say, probably 75 to 80% of our client base does have some portion of a supplemental plan. And the main reason why is because most individuals have their health insurance and their plan usage is a wellness check, couple sick visits, couple basic medications, and then really just protecting themselves and their family from more of a what if kind of catastrophic. And the supplemental coverage will save you about 60 to 70% in your premiums and even lower some of your future out of pockets for, those major medical bills, the hospitalizations, major accidents, things of that nature. So that's a very good strategy or popular option that a lot of people go with nowadays to kind of help them both on the front end savings for premiums, but also on the back end, kind of mitigating future out of pocket costs for major medical bills.
Okay, awesome. Well, and everybody remember, if you have questions, anything that we've missed, we're going to do a question section at the end. Type them in the chat. Jillian is in there. She's our director of marketing, and she will be able to make sure that your questions get asked if we don't cover them, in kind of what we're talking about. Blake, thank you, my friend. I appreciate it. Matt, let's put you on the hot seat for a minute. All right.
Okay.
Talk about.
And I have a couple of.
Oh, you got questions for Blake? Okay, hit it.
Yeah, I have questions for Blake. I didn't know if you want me to ask them now or later.
Yeah, go for it, man. Hit it.
And I don't think you touched on this, but how many of your clients offer HSAs or FSAs? And like, what is your recommendation on if they should offer that through their medical plans?
We have a lot of those options that we can offer, but I would say probably less than 2 or 3% of clients end up going that route. Anytime it gets brought up, I always want to loop in, their financial advisor, somebody like yourself, or their CPA, just because those plans obviously are designed, I think, primarily to give you, additional tax breaks or tax savings, things of that nature. And the reason why a lot of my clients don't end up going that route is just because, believe it or not, those plans are really not that much less expensive from a premium standpoint. So you're paying almost the same premium, sometimes even a higher premium than a plan that's going to give you first dollar benefits. And so when you really look at the math of it, you typically have to be in a pretty high income bracket, or be in a situation to where you've got a really high usage and you're going to hit your deductible and have a lot of write-offs in order to get the tax savings or the cost savings on that from what I've seen. But again, that's kind of spilling over a little bit into your area of expertise as much as mine.
Yeah. Okay. Thank you. Sorry, Jeff.
Cool. No, you're good, man. You're good. Okay. So, I would assume, Matt, that like Blake, depending on, company size and structure and things of that nature, there's all kinds of different things that you can do financially to offer some sort of benefit to entice people that you're wanting to hire, or to help keep those team members that have been, that are great team members. Kind of tell us a little bit about, what some of those options look like.
Yeah. Thanks, Jeff. It's really more and more companies are starting to offer retirement plans. And a lot of that's because younger employees are expecting it. They're asking about it when they're coming in to interview. But a lot of it depends on the type of industry you're in. There's certain industries where the type of employees you have either want it, or others where they don't really care. It's not a top priority to them. And so it really depends on what kind of business you're in, what type of employees you have, if they even want it. And there's different types of retirement plans you can look at. I mean, traditionally, most people just think when they hear retirement plan, they think 401k. And most, especially small businesses think, well, we don't need a 401k. We're not big enough for that, which they may be right. A lot of it depends on the number of employees you have, and it comes down to cost. Because 401ks, there's just fixed costs in addition to any matching. There's also just fixed costs that go along with 401ks, and there's more reporting as far as like third-party administrators that go into it. But for most employers, if you're a smaller company, I would say 25 or fewer employees, most of the time a simple IRA is the way to go, because it works just like a 401k, but there's less reporting requirements. It's a lot less expensive. It's just easier to set up. And so, the way that would work is that, the company would set up a simple IRA, and they would give employees the option of signing up. And there's two different ways you can go about it. You can do a 3% match, or you can do a 2% like mandatory contribution. In other words, if you have 10 employees, if you want to only put in 2%, you have to do it. You have to set up the accounts and automatically give it to everybody, whether they want to put their own money in or not. Right. Most employers don't choose that option. They want the employees to have some skin in the game. And so then it's a 3% match. And so if you have 10 employees and only 4 sign up for the simple IRA, then you're matching their contributions up to 3%. So if they only put in 2%, then you're matching that too. If they put in 10%, 3 is as high as the employer goes. And so the simple IRA is typically the best place to start. When it comes to setting up some sort of business retirement plan, there's 2 like primary, I would say, reasons or benefits for a company to set them up. One would be just employee retention, morale, of the company. And the second would be tax benefits for the company and or the business owner or upper management. And so what I mean is, if there's a company, and I have clients where they only have 4 employees, and the employees don't really care to put money into a plan, but the employer is 50 plus, and they want to be able to put as much away for retirement as they can because they're getting closer to retirement, then you can set up a plan specifically designed for that, so that the owner can put as much away of their own funds as they can. If it's just strictly for employee retention and to offer something maybe that your competitors are not offering, or offer it because your competitors are offering it, then there's definitely different ways to go about that. But I would say those are the 2 biggest things is, the cost of the plan. And typically a 401k, like I said, until you get over 25 employees, I don't think a 401k makes sense. And even if you have, 50 employees, but you only think 5 are going to take part, or 10 or 15, then I would still go with the simple IRA. It's just a lot less cost and a lot less reporting like to the IRS on that. But when it comes to 401ks, if it does make sense to do a 401k, I always include like an actuary. We basically run a census of your business to figure out how many employees do you have, what's their average income, how many highly compensated employees, and just, run some numbers and figure out, does it make sense? What type of plan does it make sense to offer? So there's even different types of 401ks based on what it is you're trying to accomplish. And then we also loop in your CPA to see just, does it make sense? Because it has to make sense financially for the company as well. So I'll take a breath. Is there any questions so far?
You're good, man. So I'm curious, because one of the things you said really kind of stuck with me. When offering, did you call it a simple IRA? Is that okay? So when offering a simple IRA, you said that there's a that you will have a percentage of employees that choose not to participate. Do you really see a pretty good amount of team members that are like, you know what, I don't really, maybe I'm too young or I don't have enough money to do something like that, but you actually see people that choose not to participate, even if it has a match with it?
Oh, absolutely. I mean,
man, that's super. That's free money.
Yeah, I have a 401k right now. It's a concrete company, and they have 400 employees. And we set up a 401k with I think it's a 3% match. And I think we have 70 out of the 400 that have signed up. But it's a lot of employees who are living paycheck to paycheck that don't necessarily think they have extra money. They can't afford to put, if they're used to spending every penny of their paycheck, when you set up a retirement plan and say, well, here's some free money, in their mind, a lot of times they're thinking, well, I have to give up part of my paycheck, so I'm not going to do it. But what they don't realize is they're just leaving a bonus on the table. An employee that makes $40,000 a year, a 3% match, that's $1,200 a year. So if that employee just puts $100 a month in, they're going to get $100 a month. But they a lot of times look at it like, well, that's going to cost me $100 a month. They think of it as a cost as opposed to them just saving. And they also think, well, I can't touch it till I'm 60 years old, so I'm not going to do it. And it's my job as, the financial advisor on the plan. I try to talk to every employee into doing it. We do education where when we set up a new plan, we go and meet with all the employees. That company I was talking about, they have locations in 5 different states. So we did a lot of Zooms, meetings where we just go through how the plan works and really try to explain, because most business owners, they don't look at it like, an expense. Like, they don't look at it from the perspective of, I hope not very many people sign up because it's just going to cost the company money. Most employers, in my experience, like, they want every employee to sign up because they care about their employees, and they know that if that employee just starts putting away $100 a month, all of a sudden in 30 years, that's going to make a huge difference, as opposed to the employee who's just spending every penny of their paycheck. And when they get to age 65, Social Security was never intended to pay for all of your retirement. It was intended, when they set it up, to be a supplement or to pay for a portion of your retirement. But so many people are not putting away money into a retirement plan, or they don't have access to one at their job, and they're going to be in a tough spot when they're 65 or 66 and retire and are just trying to live on Social Security alone.
Yep. So you hit something there that it was going to actually kind of be my next question is if a company decides to set up something like that, you or a financial advisor would actually come in or Zoom in or whatever and be able to explain those benefits to their team members so that they know, hey, yes, I understand that that times are tight. We all know, right? Times are super tight right now. But if you're willing to put in at least something, the company is willing to match that for free, and you're going to grow it twice as fast, right? I mean, that just seems like, so that is something that you guys do. Okay, I have another question, because we know people, very rarely nowadays do people go to work for a company, retire 45 years later, get the gold watch, and sail off into the sunset, right? It doesn't work anymore. And that's one of the reasons we're having this conversation, right? Is employee retention and all of that. So say I hire someone, or I'm an employee that leaves a large HVAC company, does a lot of big commercial, huge company. They provide that company 401k and all that kind of stuff. And I decide it's time for me to make a move. And I move to a smaller company. How does that work? Can I take my money with me? Do I transfer it to a new advisor? Or now do I have 2 buckets of money going? Can you explain that to us?
Yeah, absolutely. So when somebody changes jobs, which, like you said, happens a lot more nowadays, you can move your money with you. You actually have 4 different options. You can leave it in your old 401k and leave it there and just let it grow. I mean, obviously, you can't make any contributions to it. Your old employer is not going to make any contributions to it, but you can leave it where it was in that old 401k. You can roll it into a self-directed IRA, which means you can roll it into just a personal IRA where you manage it, or you and your financial advisor manage it. But then the other option is, like, if your new company has a 401k, you can roll that into your new 401k and just add it to, like, so let's say you have started a new employer and you're starting with a balance of 0 in your 401k, and you start putting in $200 a month. Well, you can roll your old 401k that has a $50,000 balance, and now all of a sudden your new 401k has $50,000 in it, and you're also still adding to it on a monthly basis. And that, when you brought that up, that reminded me of something else that I wanted to bring up. You can set, which is a lot of times a question that business owners ask is, well, I have a lot of turnover. You know, I unfortunately, we have employees that come in, they work 6 months and they're gone. And it seems like a big headache to have to set up their 401k and start putting money in there, and they leave 6 months later. And so you can have eligibility requirements within, whether it's a simple IRA or it's a 401k. You can set, when we build a 401k, or we build a retirement plan for your company, we sit down, like I said, with the CPA, with the actuary, and we run through and we model it however you want to. Like, do we want to offer Roth or just traditional 401k, or both? Do we want to set limitations? So you can set limitations like, you know, an employee has to have worked here for a minimum of 1 year or a minimum of 2 years, and they had to have earned a certain amount of salary before they are eligible to take part in the plan. Okay. And that way, if you have like seasonal workers, or if you have employees who start, you know, with you, they're not eligible for the first year, because you want to make sure they're actually going to stick around before you put money, before you go to the trouble of setting up the account and start contributing for them. Also, you can do vesting. You can't do it with a simple IRA. A simple IRA, once you put it in there as an employer, the money is, you know, theirs. But with a 401k, you can set, you know, vesting schedules where the contributions from the employer, you know, it's not really the employee's money until like a year down the road or 2 years down the road. Just that way, if you're going to put money in for them, they have to stick around, and it's another way to increase, you know, employee retention, because if they leave, then they're going to be losing some of that money you put in their 401k for them.
I love it. No, that's exactly it. That's kind of that employee retention part that we want to get into, right? You know, we've got this great financial benefit package, but, you know, it has to be earned. And that means that we want you to be a longtime team member of ours. I want to hit one more thing with you, Matt, before we go into cultural benefits. And that is, we've got a lot of business owners on this. And it seems like a lot of the business owners that I talk with, whenever you ask them, what is your retirement plan? And it's always, well, I'll just sell my business. And that's kind of the retirement plan. And that's what we all want, right? We all want to have that goal, or we all want that to be, you know, the way that it works. But that's not always the way things turn out. So working with a business owner, I'm sure, is something that's very important, to go with the path of, yes, I'm saving for retirement, but also, do you kind of work with them with what selling the business down the road look like, and kind of building that exit model 30 years from now for the retirement?
Yeah, that's a very good question, Jeff, and one that a lot of times people don't really put enough thought into. So like, if I have a client who is not really saving very much money, but they just say, I'm going to sell my business down the road, that makes me very nervous, because a lot of times they have maybe an overinflated idea of what the business is worth or what they can get for it. I mean, obviously, when you sell something, it's only worth what somebody else is willing to pay for it. And so we run through different scenarios, because, like, you know, what happens if the owner has a heart attack and passes away at 52? And he was the one running the entire business. Is that business worth, you know, a week after he passes away or a month later, is it worth what it was when he was the one running the company? Because now he's not there. Like, what is that company worth? And so we, you know, especially when it comes to multiple owners, we look at, you know, setting, you know, whether it's like key person insurance, like looking at what's going to happen for your family if something happens to you, or if you are going to, you know, if you're planning on selling this company down the road, that's great, but let's diversify you a little bit. Let's start socking away money into a 401k over the next 20 years. So at least that way, all of your, you know, family's net worth isn't just tied to this one business. Because I've had situations where everything's going great, and then all of a sudden something changes in the industry, or all of a sudden another company comes in, and all of a sudden the value of your company goes down 25%, or just it's all of a sudden you can't find a buyer. You know, you're at 65 years old, and you have to, you can't really find a buyer because of the size of your company maybe isn't right. I can think of 2 instances right now with current clients who are trying to sell their business, and it's hard finding just the right person to buy it. So planning ahead and not just depending solely on the value of your business as your retirement plan, I think is just a smart idea to diversify.
Well, and we see this so much in the trades, right? Because we see guys that are maybe smaller companies. They are the, maybe still such a key part of making sure that the business runs every day, that the work is done every day. It's their name, right? Their face. And you're right. And bad things happen sometimes. And, a business will close or someone passes and the value of that business is just not what it was because, it was Bill's forever and everybody trusted Bill and Bill's gone. And that's a game changer for sure. Awesome. Very good stuff. So let's talk a little bit about cultural benefits. So for everybody that registered for the webinar, you're going to be getting an email from us on an incredible article that Jillian wrote all about cultural benefits and what that looks like in the trades and what that looks like in today's market. So I want to talk a little bit about that because, these are those different benefits that make your employee or your team member smile. Something that that Blake doesn't provide, something Matt doesn't provide, or maybe that they something a little different because the pizza party once a year has kind of gone by the wayside, right? That was somebody, that old joke, if somebody comes to you and said, I want a raise, can't give you a raise, but we're having a pizza party on Friday, so that's good stuff. So some of the things that Jillian wrote about, and we can kind of talk about some of these things, is different types of cultural benefits, and one of them that is that's interesting that I kind of think is when in really encouraging the health and wellness of your team, we're seeing people nowadays offering gym memberships as something that they can provide their staff, especially if you have somewhere in town like a Planet Fitness that's super affordable. You can provide something like that and help promote health and wellness to your company. I know that there's a company that I know of every year. They do like a weight loss challenge when they're coming out of winter hibernation and all of the holidays. It's one of the things that they provide, and there's a small prize at the end for getting their team members kind of ready to gear up for the spring and summer sessions. Another one that I think is great, especially for the trades that are guys, gals that are working, super hard, super labor intensive jobs, is either a membership or gift cards to your local chiropractor or your local massage therapist. I know there are massage therapists in the town that we live in that will come in and do like 20-minute chair massages. And you can bring them in, and after your team meetings, let everybody get a little neck rub or back rub and kind of make them feel a little bit better. So that's something kind of fun that some companies are doing. One of the things too, I think that people are offering nowadays, we always used to get, like sick days or things like that, but there are large companies and this, I don't know if this is as much trade related with mental health days or therapy days, but being able to offer your team members a day off with no questions asked, kind of that PTO form of, this is my time, I want you to use it. One of the things that we do, that we did in our company forever, is that we gave, one of the things that we gave was vacation days and PTO days, but they were use it or lose it because we highly encouraged our team members to use their time off. Use that time off to spend with your family. Use it, take a Friday off and go fishing, whatever you're looking to do, to kind of help keep you in a state that when you're here, you're focused and you're happy. And that's kind of one of the other cultural benefits we're seeing a lot nowadays is people going more to a PTO model than a sick day model. Have you guys come across anything that your companies that you deal with are doing that's kind of unique that you think is kind of a neat benefit that they're giving?
One thing that and you talking about the gym membership, some of it is, and this kind of goes back to the healthcare side, maybe Blake can comment on this, but it's also like preventative, right? It's not,
sure,
like the gym membership like you talked about, or, paying for going to a nutritionist, or like, I know like our benefit, our plan at work, if we can show that we have a gym membership, then we get a certain amount off of our monthly, expenses for healthcare.
Yep.
So, I mean, that's something that I appreciate. It's just, it's not just paying for when something goes wrong, but it's like trying to live, have our employees live a healthy lifestyle so that they stay at work and they don't have to go to the hospital because they're staying in good health.
Yep. One of the things too that comes up a lot, and I think this is very again one of the things that's super specific to us in the trades, is doing company funded professional development, which sounds super fancy, right? But all of the most of us, whether we're HVAC or plumbing or electrical, we have a primary vendor that we work with. Maybe a line of air conditioning that we rep or that we use. Maybe it's a specific supply house that we use. And a lot of these companies provide really, really good professional development, whether it's training on the equipment, maybe best practices training, some stuff like that. And being able to offer, and a lot of times those classes are very low cost or even free through supply houses. But being able to offer your team members a day to go to a class like that, a paid day to go to a class like that, is huge, because we want them to stay, up to date on all of their certifications, all of their licensing, what's coming in manufacturing, what's coming as our products and things get more efficient and things develop. We want to educate them, and being able to offer those as paid days, I think is a big day. A lot of times, I think we used to do those as, well, it's just part of you doing your job, right? You just need to learn about the product. But sending them to professional development days being paid is a big one. I think another one that comes up a lot, especially through probably more through our CSRs and dispatchers, and I guess a lot of our technicians that are single parents nowadays, is maybe working and helping with childcare, trying to offset some childcare costs, where you can have that team member and work with them on help paying some of that childcare cost, because a lot of people nowadays are single working parents that and daycare is expensive. It has gotten out of control. I think that's a great one too. Let's see. One of the things that we did, and I think a lot of companies do, that I think was always really important, is in our team meetings, we would work to encourage or acknowledge things that were happening, good things that were happening in our team members' family. For example, if you know that Bill's son is graduating from high school, being able to give Bill a card for him to give to his son with a Amazon card in it, or a little bit of cash, something like that, was always really, really big, because it's one thing when you acknowledge me and my hard work, but I think it's another thing whenever you have learned about me, you understand, you've learned about my family, you've listened and you remembered, and you're doing something for one of my family members. I think that's a huge benefit as well. So let's see. We did have one come in, a big one that I think we all would love, which is the Monday off after the Super Bowl is becoming a huge benefit. I know my daughter even asked me this year, she's like, why do they play the Super Bowl on Sunday? And I think we all wish they would move it to Saturday, but apparently that's never going to happen. So the Monday off after the Super Bowl is definitely a huge benefit that I think most of us could really enjoy. Anything else that you guys can think of that sticks out in your mind?
I think all those are good suggestions. The only thing I was going to add, and I think you kind of hit on it with, acknowledging family members, and giving them that card with a gift card that they can pass on.
Yep.
It's really just, I think in my experience, as I, used to manage, pretty large groups of people, it's really just letting them have a voice, right? And just knowing them, and, as a leader or a boss, really just understanding what it is that they want, right? You could offer the best benefits in the world,
Yep.
but if it's something they can't use or benefit from, or something of that nature, then unfortunately they're going to almost see that as a negative, as a positive. I mean,
Sure.
I think over the years of trips that I've qualified for, cruises and things, that, the company's touted as, these huge benefits that, I didn't participate in because I didn't want to go without my family, and my family members were seasick.
Yep.
So, I kind of looked at it as almost a negative as opposed to a positive. So, you can't overlook, I think, what you hit on there at the end of just, really knowing and listening to your employees. They'll tell you what they want. They'll tell you what they value.
Yep.
And sometimes it's the things that don't even cost as much.
That's right. That's listening to your team members, right? Asking the question, listen to your team members, because you're right. There may be something that you are just not, that you're oblivious to, and it's a low cost or easy way to provide something that gets a lot of good morale, right? So very good. Okay, so with us, obviously, trade jobs, if you're looking to hire or you're looking to, post jobs, we would love for you to come on there and post your job with us, save time and money, and find those quality candidates that you're looking for. So, gentlemen, let's get into some questions. Jillian, did we have anything in the chat or anything that we missed or that we can talk about a little bit more? See if she was able to find anything for us.
While she's looking for that, I think one thing that we all talked about a little bit, but just kind of going back to it, I think in offering a benefit, whatever that may be, I would assume that the goal of the business or the business owner would be to have high participation or acceptance of whatever that benefit is.
Mm-hmm.
And so just kind of going back to our area of, where we specialize is in healthcare,
Mm-hmm.
is, really making sure or asking the question, right? I mean, if you're offering those benefits, what is your participation? I mean, a lot of the companies that we inherit or take over and assist with that area, they've got 30 employees, 4 people participate in healthcare.
Right.
That's not very good.
Mm-hmm.
And the downside that a lot of individuals don't realize is that when your participation is that low and it's a group plan or something of that nature that you're offering, not only is it just the obvious effects of low participation and maybe, killing morale a little bit, but you're also inadvertently penalizing those individuals that aren't participating because now they're ineligible for a lot of private insurance plans that they might otherwise be able to go out and get that are less expensive. So it's kind of really to look key, I think, to look at it from a couple different angles and to really have an expert, whoever it is that you wish to use, to really kind of walk you and talk you through those options, of not only what the benefits are, but what are the negatives of doing it a certain way or not doing it a certain way.
Blake, how often, one of the questions that come in was, how often should I look at, I don't know, when can I change my benefits, or how often should I look at changing it? Is that something that you do yearly or, every 6 months? Kind of tell us a little bit more about that.
I mean, I kind of do a review with all of my clients yearly. Obviously, looking at a business is a little different than looking at individual coverage. But if you have a group plan, then you definitely have to look at it annually because there is kind of a management component to that. A quick example would just be if you have 15 participants in a group plan and you have one person that has high medical claims, you're going to get a pretty significant rate up. It could be 20 to 50% upon your renewal date. So that's something that you've really got to educate your employees and participants on how to use their healthcare so that you can mitigate some of those costs for the entire group.
Mm-hmm.
If it's more of a health contribution plan like we talked about, and there's not as much of that needs to be looked at, but you still need to look at that. Obviously, as your employee demographic might change from year to year, just certain trends in the industries, there may be a few things that you can do to save a little money or keep your costs the same but offer more benefits. That's just a conversation that certainly should be had yearly. That's a quick conversation that I think creates a lot of value.
Sure. Cool. Well, very good. Well, gentlemen, I want to thank you both for being here, and your expertise in your field is invaluable. Obviously, it sounds like having someone, whether it be a financial planner or a health insurance broker working within your business or working with you as a business owner, to be able to provide benefits or help with benefits is definitely a conversation they need to have. Your emails are here on the screen. If anybody has any questions regarding anything that was talked about today, whether it be with insurance stuff, reach out to Blake. He can, very easily answer your questions. Same with Matt. If you've got questions about your financial goals, or how to provide different types of benefits to your team members, or if you're one of these guys that I meet all the time that thinks that their retirement is built solely into selling your business, have a conversation with them. I think you'll be very surprised at how easy it is to save a little money on your journey with that. So with that, I just want to thank everybody for joining us. Thank you guys for being here. And we will, if we can ever help you, just get on gettradejobs.com, shoot us an email. And gentlemen, thank you, and we'll talk to you soon.
Thank you.
Bye.
Thanks, Jeff.